Hello guys, this is the voice of Origins Media. Okay, you're welcome. This video I'm going to explain to you with this video how Binance Future Trade works, everything about Binance Future Trade, how you can enter market on Binance Future Trade, and how you can close market whenever you are in a profit and want to close the market, or maybe you are okay with that profit and want to close the market. How are you going to do that? I'm also going to explain down how what are these leverage all about. I'm going to explain to you again. Then what are these this limit order and market order is all about. I'm also going to explain to you. Then what is this TP and SL? They call it take profit and stop loss. I'm going to explain it one after the other. This long or buy and long, what are they stand for? I'm going to explain to you guys. Then when you enter this sale, what is this sale all about? I'm going to explain to you one after the other. Then what is this position? It's all about. I'm going to explain to you one after the other. So these are the things we are going to learn today. Now, someone sent me a signal that I should enter LPT, but what I'm seeing here is Wu USDT. How am I going to change it to LPT? What you have to do is to click on this place. Maybe someone drop a signal and you are not seeing that coin there. You just come and type. If the person says LPT, you type LPT and LPT will appear. You just click on it. Then you go and put the signals. So I'm going to explain everything one after the other here. So we are going to start from buy. Now, I'm going to start from this cross. What this cross means. Now, in my available balance here, I'm having 0.78. Now, the market says that, James, you are having 0.78 on cross. So, now I'm on cross. I'm explaining cross now, what this cross means. So, the market says, the cross says that, James, you are having 0.78. So, if you enter market with $8, with $0.8 now, I'll be having 0.70 in my available balance. So if the market goes against me and liquidate me, I'm going to lose all of this money, 0.78. Then on the isolated says, he says, James, you're having 0.78. If you enter market with 0.8, you'll be having 0.70. If the market goes against you and liquidate you, you're only going to lose 0.8. I say, okay, these are the differences between this cross and isolated. Cross is telling you that now I'm having 0.78 in my available balance and I enter market with $0.8 and the market goes against me and liquidate me. I lose. Then I'm going to lose all of this money in my available balance. But this isolated says, it says, James, you are having 0.78. Now you are entering market with 0.8. You'll be having 0.70. If the market goes against you and liquidate you, you're only going to lose 0.8. I say yes. Now, people are asking, if it is so, then why should we use cross again to trade? That's where I'm going to explain it to you one after the other now. The cross now, the reasons why we use cross is to increase our liquidation price. And what is this liquidation price? I'm coming there. I'm explaining this one after the other. The cross here increases our liquidation price so that in case the market start going against us now, they will not kick us out from the market on time. So I'm going to explain what liquidation price is all about. Now I've explained what this isolated and cross is all about. Now we are going to this leverage. What are these leverage? Now, this leverage you are seeing there, I'm going to explain one after the other. Okay, let's say, James, my available balance now, I'm having $0.78. Now, I want to use 4x. If I use 4x now, and someone enters the same thing with me, the person is using 20x, and the market goes in favor of us, two of us, the person is going to earn more than me. The person is going to earn times 4 of what I'm earning in my own wallet, my own trading profit. The person is going to earn times 4 of whatever is going to earn times 4 of whatever profit I'm making in my own trades here. Because now, why the person earn more than that? Because if the market should also go against us together, the person that is using this 10x, they will kick him out of the market before me. Me, I will stay long. Before you know, they already kick him out of the market. These are the differences between these 10x. These are the percentage. This also contribute to our percentage, our profit in Binance future trades. Now, if I'm using 10x with $100 now, and another person is using 20x with $100, the person is going to earn times 4 of whatever profit I'm going to make with this 10x. That is just that. Now, the reason why we also use this low leverage is also to increase our liquidation price. It will make us to stay long in the market, even though the market is going against other people. Our own, even though the market is kicking people out of the market, even though the trade, the trade is kicking people out of the market now, they were not going to kick us on time. It will stay long. And before you know now, the market is still coming down in favor of us. That's the reason why we use low leverage and high leverage. Those that use high leverage, they bear high risk. And we that are using low leverage, we are bearing low risk. We are managing our risk. So that is that. Now, what is this market order? We have limit, post only, and market order. Now, if the major ones we use here is this limit order and market order. Limit order and market order. These are the major ones we used, and these are the two terms I'm going to explain now. Either this limit order or market order. I'm going to explain only limit order and the market order. These are the two things I'm going to explain now. Limit order here and market order here. These are the two major ones we normally use here. The most popular ones, limit order and market order. These ones are also relevant, but these are the ones we make use of it daily. Limit order, market order, and limit order. What if your Binance future trade is on this market order? What does it mean? What it means is that if you're on this market order now, look at the price of WU USDT is 0.57, is maintaining 60 to 59, right? Now, look at the price of this WU now. Look at the price here. This is the price of WU now, the current market price. Look at it now. This is the price of WU now. You can see the price of WU now. The market is saying that now I'm having 0.78 now. If I should enter market with what? With 25% of 0.78, it's going to give me what? 0.19. You see, 25% of 0.78 is 0.19. That means I'm entering market with $0.19. Now, if I should enter market using this market order, this market will peak immediately here. It will peak. So, and if I'm using this limit order now, then I have to set my own price. I have to set my own price. Now, what I'm going to use, maybe look at it now. For me to long, that's for me to buy. Buy also means long. Long also means buy. Look at it under here. You see, buy or long. Either buy or long. If anyone drops a signal and say long, the person is telling you to buy. And the person say buy, it's also telling you to long. It's the same thing. Long also means buy. So that is that. Since we are explaining this buy, let's explain it like this now. Now, if I'm using this limit order, now, I'm going to I have to set my own price. Maybe I don't want to buy it at this market price. So I want to set my own price so that let this thing come down small before I buy. So I have to set it like this, 0.15587. See, 0.15585. Then I'll click on, and I'm using what? I'm using 25%. Look at it, 0.19. Then I'll click on what? When I click on buy, You can see it's less. This is too small for it. Do you understand what I'm saying? It's too small. So let me pick another. Let me pick another pair, another coin. USD. I want to pick another coin. Let me use this LPT. I'm using the LPT. Now, if I'm this on this limit now, that means I want to use like I'm setting my own price. So I don't want to. I want to buy now, but I don't want to buy it at this on the market price. I don't want to buy. If I put it on this market price now, everything else. If I click on this 25%, 25% here is giving what 0.17. If I should click on buy now, it will have to go and wait. It's still not much. That is that. So I'm just explaining now. So whenever you see it on this limit order is saying that you are using, you are setting your own price, waiting for the price to come to that point before it triggers. That means if I set my own price as okay 5.8800, then I have to wait. Let me use limit order now. Then I have to click on buy. You can see it's going here, open order. It's waiting. Once this price drops to 5.800, then the market will peak to long. Do you understand? You can see that. Then the market will peak to long. You can see that it's waiting. Let's open order now because I set my own price. I don't want to enter market at this level. I want it to come down more than this before it triggers. So I have to put it 5.800. Now it's waiting here. Once the price reach here now, it will just trigger. That is that. So that is that. Now let's use market order and see this market order here. Now I'm using this I'm entering with this market order, this market price. I'm entering here using this market price. So I'm going to buy it now. You can see, look at it now. You can see how the trade. You can see how the trade is now. You can see how the trade is now. So if you're on a profit now, you want to screenshot, let's say you want to screenshot your profit here, you can just type like this. You can see 1%. Then you see download here. You can see the market, right? You can see how the market is now. The market peaked immediately. Do you understand? Because I use market order, it peaked immediately. But this limit order now, it has to wait for that particular price which I set it before it will trigger. And if I'm in profit, let's assume right now I'm in profit. Assuming I use big money now, I'm already in profit. That's 2%. That's 2% of 0.77. That's what's giving me 0.01. So yeah, if I'm in profit now, yeah, I'm okay with this profit too. Then I will have to close on this. I have to close the market. I want to leave it. I want to leave the market because I'm in a profit now. I'm okay with this profit. Now, if you're in profit, all your profit will be showing here. Now, the liquidation price I tell you, which is look at it here. Look at the liquidation price. Look at it. Liquidation price. Look at it here. Liquidation price. I said what? I said look at this. I'm using 10x. Now, for this thing to liquidate me now, then the market has to fall down. From what? From 5.982 to 5.516 before they will kick me out from the market. Because I'm using what? Because I'm using low leverage. Look at it, 10x and isolated. You understand? Because I'm using 10x Assuming I'm using 20x now, my position price will be either 5.700. It will go closer. So that is that. So now if I'm profit and I want to close position, just to click here and close the position. The market, you can see there. You can see from 78 now to what? 0.79. You can see there. So that is that now. So now what is this TP and SL? This we call it take profit and stop loss. Why do we set take profit and stop loss? The reason why we set take profit and stop loss, like now, when I enter the market on buy, I'm expecting the price of that particular coin to go up so that I can be making profit. Now, if I want to set my take profit on that now, okay, I was okay. I entered the market at 5.977. Now I want to close the I want to take profit at 5.985. If I want to take my profit at this level now, once the market enter this 5.985 like this now, it will just claim, it will drop my profit jeje. The profit that I made, even when I'm sleeping, the profit that I made, everything will return back to my wallet. All the profit that I made will return back to my wallet on this particular coin. That is why we set this take profit and stop loss. And there are some situations whereby we don't set this stop loss and take profit. We don't set this stop loss and take profit when entering the market. Now, and we can also do that even when we are already in the market. Now, I'm going to enter the market again using this market order because I want to cash it up. I want to use this market order now. That I'm using 10S right now. You can see the market has been picked. Now I want to set my stop loss. Look at it here. You can use this place now to set your stop loss and take and take profit. Now look at it now. Since I'm buy, I'm expecting that price to go like okay 5, or let's say let it go to 600. I want it to go to 600. Go to like 6.100. So if this particular coin goes to 6.100, it will going to give me what? $0.15. Now my stop loss now, let it be at 5.970. Now how much am I going to lose there? I'm going to lose only $0.01. Do you understand? So that is how to, then you click on confirm it here. You click on confirm it here. Make sure your stop loss, if you are buying, make sure your stop loss is lower than your entry price. Look at my entry price here. Look at my entry price here. My entry price is what? 5.984. Now I'm using this as my stop loss, 5.970. So that they will just take this jeje and leave the market. So that is how, that means if the market should go against me now, I want to lose only $0.01. Now let me just reduce it again. You can see when I reduce it again, see when I increase the stop loss, you can see there. So that is that. So make sure the one you are losing here is smaller than your profit. That's how they set your stop loss. So now I'm not setting the stop loss. You can see I'm also in profit. You can see there, I'm also in profit. Look at it now. I'm in profit, making $3. I'm 3% now. You can see there. So that's how to do it. You can see there. That's how I'm going to close this position now. Now I'm in profit. Now I want to close position. You can see the profit. The market is going where? It's favoring. You can see there. Now I want to close position now. I'm okay with this profit. You can see that initially we were having what 0.78. Now you can see 0.81. That's how people they do make profit. Look at the price now. You can see the price is going higher. That's how they do it. You understand? That's how they do it now. Now, if someone drops signal like this, I'm going to use this. So if someone drops signal, you should buy, if you should buy, you should long now. If the person say entry, market price, if the person use market price, now you need to put your market on this, your trade on this market order. And the person sets the limit order, and if you know that the price of this or the particular coin is not up to that, then you have to set your limit order and put in the use either you can use 20% of your capital, or 50% of your capital, 75% of your capital, or 100% of your capital. So that's how they do it now. If you don't, I'm going to send this video to you. Anywhere you don't understand, let me know. Okay, so that I can explain to ourselves better. You are welcome. May God bless you. And again, on the part of sell, whenever I say sell, that tends to short. Look at it. Short also means sell. As I said, buy here. You either long or buy. Then sell here, either short or sell. So if person says short, the person is telling you to sell. Then you enter the market here. Whenever you are selling, you are expecting that price to come down. The term sell here is all like this physical transaction which we do, physical market which we are selling now. We are selling now. We want to make we want the price to increase so that we make profit. No, not like that. If you are selling now, you are in the crypto market, you are expecting that particular price to come down so that you make profit. If you are selling now, the market start going against you now, you will be making loss. Do you understand? If you are selling and the market start going up, you'll be making loss. And if you are buying now and the market starts coming down, you'll be making loss. But if the market continue to go up, you'll be making profit. And if you're on sale here and you're using this limit order, all the same thing, the same way you use to enter the market on the buy here, the same way to use limit order or market order. When you are using limit order, you are setting your own price. But when you are using market order, you are entering the market at that particular current market price. So that is that. So anyway, you don't understand, then just let me know. Okay, just let me know. So whenever you use limit order, if the market has not triggered, has not reached the amount which you set for your market to trigger, it will be use of this open order. And if you are in profit, let's say you are in profit like this, the position, the way I close position that time, you can just close position. So that is that. So anyway, you don't understand, you must not enter this take profit. You must not enter profit, stop loss or take profit when entering the signals. You can just put in everything here, use your limit, use 25% of your capital or whatever you're having in your wallet. Then you click on sell or buy. Depends on the type of the type of signal the person is sending to you, the type of signal I'm going to send to you. So you enter it. Then on the other side, which I've told you, then you just put your the way I explain how to set your stop loss and take profit, even know where you're in the market. So that is that. Thank you. If you don't understand anywhere here, ask me. I'm going to explain everything to you again. Okay.